If you were to ask most newer traders or amateur traders what's holding them back, a lot of them are very self-aware and will tell you it is because they are placing too many trades. Even though they know this, they are still struggling with overcoming this. So in this video, I'm going to share with you some practical tips that you can implement straight away to help you overcome overtrading. We're going to cover some mindset and psychological shifts, some physical restrictions that you can implement, and also there are a couple cool little tools on Thinkmarkets platform which you can use to help you overcome overtrading. So if you're excited to learn, hit the thumbs up button before we get started. And if you want to see more content like this, make sure to subscribe to Thinkmarkets now as well. So first of all, let's start with some mindset shifts. Most of the time when newer traders are overtrading, it's because they're thinking that more trades equals more opportunity to make more money. But the truth is, you're always statistically more likely to lose money every time you open a trade. Every time you open a trade, you're opening up risk. So you've got to think every trade is actually an opportunity to lose money. You want to think about trading like a game of golf, which is why I've got the golf symbol up on the screen. Golf is one of the few sports, maybe the only sport, I can't think of another, where the lowest score wins. So the ideal situation in golf is you actually get a hole in one. With trading, it's very similar. Taking one attempt to make one winning trade is the equivalent of getting a hole in one. It doesn't always happen, but that is what you're aiming for. So every day when you come to the charts, you are aiming for your equivalent of a hole in one. The more attempts you take and the more trades you place, it's like taking too many shots in golf. That's not what you want to do. That's not going to get you to win. So the next thing you want to do is to set up some physical restrictions. So be really clear on what session you're trading and what time of day you're trading at. A lot of the time as well, when newer traders start, they're juggling learning to trade with another job. So often what they're doing is they're trading when they have an opportunity to. So they're trading when they want to trade rather than when they see an opportunity to trade. So you've got to be really clear on what session you're trading, what you're looking for, and what those hours are. So for example, I trade the New York session and I live in the UK, and therefore I'm starting to do my analysis at 2 p.m, which is half an hour before New York opens. And then I have about 2 hours after that where there's often an opportunity to get a good trade on my strategy. And then it starts to quieten down for lunchtime at around 4:30. So I actually have a start trading alarm and a stop trading alarm. And these help me to not trade past a certain time. You should always set a daily loss limit and stick to it as well. So for example, on my trades, I always risk 0.3%, and my daily loss limit is 3 losses, and then I have to stop. It's a very bad day if I hit all 3 losses, but that is the maximum. And I know that when I hit that, I have to stop. What that means is that I can never lose 1% or more in any one trading day. I also think it's really helpful to eliminate entire days. You don't want to be trading every single day of the week when the market's open. So another restriction that I put in place is that I'm not allowed to trade the day after I make a big win. That's because I know for myself that that is when I'm actually too confident and I almost take too many attempts the day after a big win. But for a lot of traders, it's actually the opposite. A lot of traders find that they take too many trades when they're on a losing streak because they're trying to make back the money. So you need to have a think about what kind of trader you are and when you are not at your best, and you want to almost eliminate those days. I also eliminate days based on news events. So for example, I'm also not allowed to trade the day before big news events like NFP, CPI, or an interest rate decision. If I've hit my daily loss limit and I still kind of feel like I want to trade or I want to be productive, then I can still place a paper trade. So I can still use the long position or short position tool on my screen on Thinkmarkets, and I can still watch how the trade would have played out. This kind of scratches that itch for me, but it means that I'm not actually risking any more money. And Thinkmarkets actually has some cool little tools that you can use. One of them is regulated signals. You can get these on both the web version and on the mobile app. You can just look at what signals are available from Thinkmarkets, and rather than you spending hours in front of the charts and risking overtrading, you can just set an order with one of the signals available and then get on with your day. Another cool tool that Thinkmarkets has is the Trader's Gym. This is a simulator, so you're using virtual money rather than your own money. One of the reasons why a lot of traders say that they overtrade is because they're trying to figure out what works and what doesn't work. But you don't want to be doing this on a live account and risking real money when you could be doing this on a simulator and just risking virtual money. So the Trader's Gym is a really useful tool. Not only will it scratch that itch if you feel like overtrading once you've already hit your daily loss limit, but it also means that you have that freedom to experiment and to see what works and what doesn't work without risking your own money. So I hope you found this video helpful. Let us know in the comments which one of these tips you are going to try first. And if you found this video helpful, don't forget to give it a little thumbs up.